Hey everyone, and welcome back to the channel. If you've been thinking about investing but have no idea where to start, you're in the right place. Today, we're kicking off our brand new series, How to Start Investing in 2026, a beginner's step-by-step guide. This is part 1, and by the end of this video, you'll have a solid foundation to start your investment journey with confidence. So, grab a notebook, and let's dive right in. First things first, before you put a single dollar into the market, you need to ask yourself a crucial question. Why am I investing? Seriously, take a moment to define your financial goals. Are you trying to build long-term wealth? Are you saving for a comfortable retirement? Maybe you're planning for your kids' education, or perhaps you just want to generate some passive income on the side. Your reason why is everything. It will shape your entire investment strategy, from the types of assets you choose to how much risk you're willing to take. A goal without a plan is just a wish, so let's make a plan. Write down your top 1 or 2 financial goals right now. This simple step will keep you focused and motivated, especially when the market gets a little bumpy. Next up, let's talk about the fundamentals. I know, financial jargon can sound super intimidating, but trust me, the basic concepts are actually pretty straightforward. Before you invest, you should have a basic understanding of what things like stocks, bonds, and ETFs are. A stock is basically a small piece of ownership in a company. A bond is like a loan you give to a government or a company, and they pay you back with interest. And an ETF, or exchange-traded fund, is a basket that holds a bunch of different investments, like stocks or bonds, all in one. You also need to get familiar with terms like risk, diversification, and the magic of compound interest. Risk is the chance your investment could lose value. Diversification is the idea of not putting all your eggs in one basket to lower that risk. And compound interest? That's the secret sauce. It's when your earnings start generating their own earnings. We'll cover these in more detail in future videos, but for now, just spend some time getting comfortable with these core ideas. It's like learning the rules of a game before you start playing. Alright, before you get too excited and start downloading investment apps, there's a critical step you cannot skip: building an emergency fund. I can't stress this enough. An emergency fund is a stash of cash, typically 3 to 6 months worth of your essential living expenses, set aside in an easily accessible savings account. Why is this so important? Life happens. Your car might break down, you could have an unexpected medical bill, or you might face a job loss. Without an emergency fund, you might be forced to sell your investments at the worst possible time, potentially locking in losses and derailing your long-term goals. Your investments are for your future. Your emergency fund is for your present. It's your financial safety net. So, before you invest a dime, make sure your safety net is securely in place. It provides peace of mind and protects your financial future. Now for the fun part, choosing where to invest. We're talking about picking the right investment platform. In 2026, you have a ton of options, from traditional brokerage firms to slick, user-friendly apps on your phone. When you're just starting out, you want to look for a few key things. First, make sure the platform is trusted and well-regulated. Security is non-negotiable. Second, pay close attention to fees. High fees can eat into your returns over time, so look for brokers with low or even zero commission trades. Third, check if the platform is beginner-friendly. Does it have educational resources? Is the interface easy to navigate? And finally, a fantastic feature for beginners is fractional investing. This allows you to buy a small slice of a stock, even if you can't afford a full share. It means you can start investing with as little as a few dollars. Do some research, compare a few options, and pick one that feels right for you. Last but not least for today's guide, let's talk about your very first investments. When you're a beginner, it's wise to start with low-risk options. The goal here isn't to get rich overnight. It's to get comfortable with the process and let your money start working for you steadily. So, where should you look? A great place to start is with index funds or ETFs. Remember how we talked about ETFs being a basket of investments? An S&P 500 index fund, for example, lets you invest in the 500 largest companies in the U.S. all at once. This provides instant diversification, which significantly reduces your risk compared to picking individual stocks. Diversified mutual funds are another solid choice for beginners. By starting with these broader, more stable investments, you can build a strong core for your portfolio before you even think about venturing into riskier assets. Start slow, start smart, and build from there. And that's a wrap for part 1 of our beginner's guide to investing. We've covered setting your goals, understanding the basics, building an emergency fund, choosing a platform, and making your first low-risk investments. You've now got the essential building blocks to start your journey. In part 2, we'll dive deeper into creating a diversified portfolio, understanding risk tolerance, and setting up automatic investments. Make sure you're subscribed so you don't miss it. If you found this video helpful, please give it a thumbs up and share it with a friend who is also looking to start investing. Thanks for watching, and I'll see you in the next one.